Hey, what's going on, guys? Today I want to talk about a calculator that I created that you can leverage and create some illustrations for yourself. So let's go ahead and dive into the spreadsheet here. Disclaimer, I might be getting a little carried away with these calculators. If I am, definitely let me know down below. But what this calculator was designed for is, specifically just compound interest, right? The greatest thing with compound interest is time. And the more time you allow your money to compound and grow over 20, 30, 40 years, the better. So let's go ahead and run through some illustrations here. We'll run through some numbers and kind of show you how to use the calculator. I'll leave a link down below that you guys can use and make a copy, and then kind of run your own numbers and kind of go from there. So there's a couple different inputs here. So for our illustration, we'll do a couple different ages. And then run the numbers here. So 25, actually let's do 20. So this is almost, it might be 39 years based upon how it's calculated, but it's right at 40 years. And let's say you're able to, invest or save, $500 a month or $6,000 per year. So what that's going to do, it's going to populate this value here, and you can see that number quickly populates to $2.65 million. And the next box over here is the assumed 4% rule. You can obviously tweak this. I think I allowed all the way up to 20%, so it's much riskier, 25% even riskier. But yeah, so as low as 2% all the way up to 25%. And then the assumed interest rate accumulation phase. This is pretty much your compound annual growth rate. So we have that set at 12% right now. I think the S&P 500 is close to that. And then lastly, this box right here is the assumed inflation rate. So this is pretty much just going to subtract from this amount. So it's set at 2% right now, but it can go all the way up to 20%. If we hit 20% inflation, that's going to be a bad day for a lot of assets out there. But we'll just leave it at 2% right now. So this is projecting, a 10% compound annual growth rate. So just keep in mind, there's no taxes implied with this. That's where this will come in place. So, if you want to have it implemented up to 30%, I think that's the highest it goes. But if it's not, definitely let me know down below. I can adjust that. But we're just assuming like this is in a tax-free account, like a Roth IRA or Roth 401k, Roth, TSP, different stuff like that. We're just going to assume it for 0% right now. So, investing $500 a month for almost 40 years. The end goal, if it can produce this average of 10% a year, 12% minus the 2% inflation, gets you to 2.6 million. And then projected over 4% of that, that's typically the safe withdrawal rate. But there's some different numbers, different investments out there, especially with the yield max funds nowadays. You can definitely get much higher, but we'll just leave it at 4% for now. Definitely a more conservative number. But yeah, so $2.65 million, $500 for 40 years. So if you're able to double that, you'll quickly see it just doubles, right? 5.3 million, a little bit more, maybe more than doubled. Not sure there. But that produces $200,000 in income. Do keep in mind, in 40 years, this income is not going to be at the same value as it is today. Maybe that's something I can adjust. Project this annual retirement income, based upon a 2% inflation for 40 years, it's going to be much less than that. So stay tuned for that. I may look at adding something like that in there. But $200,000 in today's dollars, obviously 40 years from now is not going to be worth the same amount of money, but still a lot there. If you're able to stay disciplined and invest, $12,000 a year or $1,000 a month. And then lastly, we'll do $2,000 per month. This is close to the 401k, max. I think it's like 25,000. Don't quote me on that. Do your own research. But if you're able to do this for 40 years, you're looking at over $10 million. Once again, this is all hypothetical, and the stock market, historically goes up, down, up, down, up, down. So typically it doesn't just go 10% every year. You have peaks, valleys, up, down, up, down, up, down. So just keep that in mind there. But if you're able to get an average of 10%, you're looking at over $10 million and producing a retirement income of over $424,000 there. So needless to say, some pretty massive numbers. And, compound interest is a tremendous thing. Like I mentioned earlier in the video, if you give it enough time to grow. That's the biggest thing with compound interest. You have to be patient, you have to be disciplined, and you have to, continually invest. So yeah, if you don't have a long-term portfolio that you have automatic investments set up on, I definitely recommend, looking into that. Obviously do your budget, make sure you're comfortable with investing, this particular dollar amount. And, once again, when you do invest money, if you do it correctly, you're not going to be investing money you need in the short-term basis. So, once again, do a budget, make sure you're saving and paying your bills and stuff first. And then whatever you're comfortable with, definitely, look at your options out there to get compound interest started and working for you. But yeah, that's, quick little rundown of this calculator I created. Wanted to, create this resource and provide it for people out there to just create some illustrations for their own situation. You can put in your numbers here, when you might want to, retire, your starting age and so forth there. Starting principal, that's another one that I didn't really touch on. If you already have $50,000 invested, it's going to jump up over 2 million there. So just different things. It's pretty cool where you can just quickly adjust the numbers and see the end goal right there. But yeah, guys, that's going to be it for today's video. Please let me know of any recommendations or any suggestions that you might have to improve it. And let me know, whenever you do use it, let me know your thoughts. Anything that can, obviously improve it. I definitely would be interested in hearing. But yeah, guys, that's going to be it for today's video. If you got some value from it, please like and subscribe down below.